Imagine a bank so powerful it could bring kings to their knees. A bank that could threaten a cardinal with excommunication, a one-way ticket to hell, if he didn't pay his debts. A bank whose profits were so immense, they single-handedly funded the art of Donatello, Botticelli, Leonardo da Vinci, and Michelangelo. This wasn't a modern Wall Street firm. This was a family business that began in 15th century Florence. This is the story of the Medici Bank, the institution that created the machinery of modern finance, built the Renaissance, and then, in a twist of fate, collapsed under the weight of its own success. To understand our modern world of multinational corporations, of global finance, and even the tension between profit and politics, we have to go back to the story of how one family changed everything. Before the Medici, the world of finance was a disaster waiting to happen. In the 14th century, international trade was a high-stakes gamble. If a merchant in Florence wanted to buy wool from England, he had to physically ship chests of heavy gold and silver coins across treacherous seas and bandit-filled roads. To make matters worse, Europe was suffering from something called the Great Bullion Famine, a severe shortage of precious metals. The money itself was becoming dangerously scarce. The biggest players in this risky game were two Florentine super companies, the Bardi and the Peruzzi. They were the titans of their time, with branches across Europe. But they had a fatal flaw in their design. They were monolithic giants. All their branches, all their money, and all their risk were tied together in one massive, interconnected entity. If one critical part failed, the whole thing would collapse like a house of cards. And in 1345, that's exactly what happened. Both the Bardi and Peruzzi banks had made the same catastrophic mistake. They loaned an enormous fortune to a single client who couldn't pay it back. That client was King Edward III of England, who needed the money to fund his wars. When the king defaulted, it triggered a financial apocalypse. The Bardi and Peruzzi banks collapsed, wiping out the savings of countless citizens and plunging Florence into a deep depression. It was the Lehman Brothers moment of the 14th century, a crash so devastating that its memory would haunt the world of finance for 100 years. On top of this economic chaos, there was a profound moral and religious problem: usury. The Catholic Church had declared that charging any interest on a loan was a mortal sin. The rule was simple: whatever exceeds the principal is usury. This created an impossible paradox. Commerce needed credit to function, but the Church, the most powerful institution on earth, forbade profiting from it. Banks had to find clever and legally perilous ways to hide their interest in fees and exchange rates. The world was desperate for a new way of doing business. It needed a financial system that could move money across borders without shipping physical coin, and a way to make profit from lending that wasn't a ticket to damnation. The stage was set for a revolution, and the man who would lead it was not a nobleman or a king, but a cautious and brilliant banker named Giovanni de Bicci de Medici. Giovanni was a new kind of banker. He didn't come from the old landed aristocracy. He started as an employee, working his way up in his uncle's bank. In 1397, he established the Medici Bank as his own entity, but he built it on a completely different philosophy from the giants who had come before him. His entire strategy was designed to avoid the catastrophic mistakes that had destroyed the Bardi and Peruzzi. Giovanni's genius was built on 4 pillars. First, he made a strategic move. While he had been managing his uncle's bank branch in Rome, he moved the headquarters of his new bank to Florence. He understood that Rome was where the money was. It was the seat of the all-powerful papacy, but Florence was where that money could be put to work, in the city's booming wool and silk industries. Second, and most importantly, he secured the ultimate client, the Pope. The Medici became God's bankers. This wasn't just a prestigious account, it was the bedrock of their entire empire. It guaranteed a massive, steady flow of capital, as the Medici were now in charge of collecting the church's 10% tithe from every corner of Christendom. Third, Giovanni established a cardinal rule, a lesson learned directly from the 1345 crash: absolutely no loans to kings. He knew that royalty were notoriously bad investments. A king could default without consequence. This single policy of avoiding sovereign debt kept the bank stable while its rivals, chasing prestige, went bankrupt. However, Giovanni was no fool. While he wouldn't lend to kings, he was more than happy to lend to the princes of the church. Why? Because he had leverage that no other bank possessed. If a cardinal was late on his payments, the Medici could use their influence in the Vatican to delay a promotion or, in extreme cases, threaten excommunication. They had weaponized their relationship with the Pope, turning spiritual power into the ultimate financial enforcement tool. Soon, everyone wanted an account with the Pope's personal bank, creating a network effect that made the Medici the safest and most powerful financial institution in Europe. Giovanni's fourth pillar was diversification. The bank's money wasn't just used for banking, it was invested in Medici-owned partnerships in wool and silk manufacturing. This created a perfect, self-reinforcing cycle. The bank financed the trade, and the trade provided a profitable and non-usurious home for the bank's capital. Giovanni himself remained a quiet, behind-the-scenes operator. He knew overt power was dangerous. Despite becoming one of the richest men in Florence, he never held political office. He understood that true influence came from money, not titles. He laid the foundation, but the bank's most profound revolution was yet to come. It was a revolution in structure. The single greatest innovation of the Medici Bank was its corporate design. Learning from the monolithic failure of the Bardi and Peruzzi, the Medici Bank was not one single company. It was a network of legally separate partnerships, what we would today call a holding company. The Florence headquarters acted as the senior partner, holding a majority stake in a web of independent branches in all the key commercial hubs: Rome, Venice, London, Bruges, and beyond. This structure was an act of pure genius because it quarantined risk. Because each branch was its own legal entity, the failure of one branch, say in London, due to a local crisis, could not legally bankrupt the parent company in Florence or any of the other branches. It was an early, brilliant form of limited liability, creating corporate firewalls that contained financial disasters. This decentralized model required a new way of managing people. Instead of using salaried employees who had little skin in the game, the Medici made their branch managers junior partners. These managers were required to invest their own money into the branch, and in return, they received a large share of that branch's profits. This incentive structure aligned their interests with the headquarters, encouraging them to be both entrepreneurial and careful, in theory. This model created the world's first scalable multinational business. It was a 15th-century franchise system. The Medici provided the brand, the network, the accounting system, and the all-important papal connection. The local partners provided local expertise and co-investment capital. But this innovative structure also created a problem that plagues corporations to this day: the principal-agent problem. The principal, the headquarters in Florence, needed to trust its agents, the branch managers, to act in the best interests of the entire firm. This system worked beautifully, as long as the principal was paying close attention. The moment the head of the bank got distracted, the agents would be free to take on wild risks for their own personal gain, a weakness that would eventually prove fatal. To run this sprawling empire, the Medici needed a powerful operating system. They found it in double-entry bookkeeping. While they didn't invent it, they perfected and standardized it. Every transaction was recorded twice, once as a debit and once as a credit, ensuring the books were always balanced. This was more than just accounting. It was a technology of control. In a decentralized company, double-entry bookkeeping was a transparency revolution. It allowed the head office in Florence to monitor, audit, and compare the performance of its branches from hundreds of miles away. It made their complex financial operations legible and manageable. This meticulous record-keeping built a reputation for reliability, which became the bank's most valuable asset. This reputation attracted more deposits from wealthy clients, giving the bank more capital to work with. It was a virtuous cycle. Sophisticated accounting led to trust, and trust led to more money. The primary tool for deploying this money was the lettera di cambio, or the bill of exchange. This instrument was the elegant solution to the two great crises of the 14th century. First, it solved the logistical problem. A Florentine merchant could pay his supplier in London by simply buying a bill of exchange from the Medici Bank in Florence. His supplier could then cash that bill at the Medici branch in London. No heavy, risky chests of gold needed to be shipped across the continent. Second, it was a masterpiece of legal and theological engineering designed to get around the sin of usury. The transaction was framed as a currency exchange, not a loan. The bank's profit, the interest, was cleverly hidden inside the exchange rate. For example, the bank might sell a bill payable in 90 days at a slightly less favorable exchange rate than the current market rate. That small difference multiplied over thousands of transactions was their profit. It was, in substance, interest for the time value of money. But in form, it was merely a fee for exchanging currencies. The Medici even sponsored theologians to write papers defending this distinction, a pioneering act of regulatory arbitrage. They also developed products for individuals. The letter of credit was the 15th century version of a traveler's check. A wealthy pilgrim could deposit his money in Florence and receive a letter, which he could then present at a Medici branch in another city to receive local currency. This innovation made travel safer and demonstrated a sophisticated understanding of different customer needs. The bank reached its absolute peak under Giovanni's son, Cosimo de Medici. During the mid-1400s, the Medici Bank was the most powerful financial institution in Europe, and Cosimo was one of the continent's richest men. Unlike his father, Cosimo flawlessly translated this economic power into political power. He became the unofficial ruler of Florence, a position he maintained not by holding office, but by using the bank's immense wealth to control the city's politics from behind the scenes. Cosimo's true genius, however, was in converting his financial capital into something far more durable: cultural and political legitimacy. He did this through an unprecedented campaign of art patronage. The bank's profits funded the very foundation of the Renaissance. He sponsored Filippo Brunelleschi to build the impossible dome on the Florence Cathedral. He funded the careers of masters like Donatello and Fra Angelico. This was not simply a love of art. It was a brilliant and calculated political strategy. First, it was a display of power. The magnificent buildings and public art advertised the Medici's wealth and influence. But more importantly, it was an act of what we might call reputation laundering. The bank's fortune was built on hidden usury, a practice that, while legally clever, was still morally suspect. Cosimo's massive spending on religious art and architecture was a form of public penance. He was returning a portion of his questionable gains to God and to the city, recasting his family not as greedy moneylenders, but as pious and benevolent guardians of beauty and faith. The art was propaganda, warping public opinion to see the Medici as fathers of the city, not ruthless oligarchs. Cosimo was a master of both finance and politics. He remained deeply involved in the bank's daily operations, corresponding directly with his branch managers. The bank funded his political project, and his political project protected the bank. But his very success created a fatal paradox. He made the family so powerful that his heirs began to see themselves not as bankers but as princes. They inherited the political power and the lavish lifestyle, but they forgot about the commercial discipline that paid for it all. The unraveling began after Cosimo's death in 1464. The final catastrophic failure came under his grandson, Lorenzo de Medici, known to history as Lorenzo the Magnificent. Lorenzo was a brilliant statesman, a poet, and perhaps the greatest art patron of the Renaissance. He was, however, a terrible businessman. He simply had no aptitude for trade. Under Lorenzo, the bank began to systematically dismantle the very principles upon which its success was built. The first and most fatal error was the abandonment of Giovanni's founder's doctrine. They started lending to princes. Driven by political ambition rather than commercial sense, the bank made massive, unsecured loans to unreliable monarchs, repeating the exact mistake that had destroyed the Bardi and Peruzzi a century before. The London branch collapsed after giving huge loans to King Edward IV. The Bruges branch was bankrupted by reckless loans to Charles the Bold, Duke of Burgundy. One by one, the pillars of the empire began to crumble. This was made possible by a total breakdown in corporate governance. Lorenzo was focused on politics and art, not balance sheets. He kept a loose rein on his branch managers. The principal agent problem, which had been a latent weakness in the bank's structure, now became a raging crisis. The principal, Lorenzo, was distracted, allowing his agents in the branches to act like princes themselves. Tommaso Portinari, the manager of the Bruges branch, made disastrous loans for his own personal prestige, knowing he wouldn't be held accountable. The decentralized structure, once a source of strength, now became a source of chaos without strong central leadership. Finally, the bank lost its way completely. It ceased to be a commercial enterprise and became Lorenzo's personal political slush fund. He treated the bank's coffers as his own private treasury to fund his extravagant lifestyle and political ambitions. He became one of the bank's largest debtors, When the bad loans to monarchs began to fail and losses mounted, Lorenzo raided the state treasuries of Florence to cover the bank's shortfalls, including embezzling money from a charitable fund for citizen dowries. It was a sign of complete moral and financial decay. By the time Lorenzo died in 1492, the magnificence was a facade. The bank was effectively insolvent, its foundations rotten. Just 2 years later, in 1494, the Medici family was exiled from Florence. The bank's remaining assets were seized, and the greatest financial institution of the 15th century was no more. The Medici Revolution was not a single invention, but the creation of a system. They built the world's first scalable, resilient, and trust-based architecture for international finance. They understood that a bank's greatest assets are not gold in a vault, but its structure, its information, and its reputation. Their holding company model was the ancestor of the modern multinational corporation. Their use of double-entry bookkeeping as a management tool transformed accounting into the language of corporate governance, and their sophisticated navigation of usury laws was a forerunner to the complex financial engineering we see today. The story of the Medici Bank offers a timeless dual legacy. Its rise is a testament to the power of financial innovation to create value and build entire new worlds. But its fall is an equally powerful case study in the dangers of poor corporate governance, the failure of leadership, and the catastrophic consequences that occur when political ambition is allowed to corrupt commercial discipline. In a final stunning irony, the Medici dynasty survived the bank's collapse. The financial engine was dead, but the cultural and political capital that Cosimo had so carefully built proved to be a more durable asset. The family would go on to produce popes and queens, their influence echoing through Europe for centuries. The bank was the launch vehicle that put the dynasty into a permanent orbit. In both their spectacular triumph and their devastating failure, the Medici wrote the first chapter in the long and turbulent history of modern finance.